Hey everyone, this is Dual Finance. Today we're going to be demoing dual investment pools, otherwise known as DIPs. Navigate to our main page at dual.finance and launch the app. Once you launch the app for the first time, you'll be approached by this tour. I recommend you go through it. Basically, it's going to tell you how to use some of the basic functions of the app. So at the front page here, you're looking at the advanced mode of the application. We're going to start off by going to the beginner mode. This is a little more approachable for first-time users. So toggle this button here, and the first thing we're going to do is just connect our wallet. I'm using Phantom Wallet. You can see our wallet's connected, and we're looking at, right now we just have pools active on Solana, so there's only one asset. Right here is basically where you can choose which pool you want to stake into and effectively which price you want to target. So what this means is if instead of selling your Solana, let's say at $23 right now, by selling I mean resting a limit order into the book, you can actually get paid up front by staking. So we have several different pools here. You'll notice it says high exercise risk. All that means is that you're more likely than not, in this case, to potentially lose your Solana but receive USDC instead. I'll go into that in a little more detail as well. So here there's several pools. Defaults to the highest APY one. We're probably looking for something more in the medium range. Let's see what this one looks like. So it's going to tell us low exercise risk, 26% APY. We like that. You also notice there's several different dates here, so this is how long you're going to lock them up for. You won't be able to access the actual staked Solana until this date, and we'll see that here in a minute as well. So let's go back to, let's try this one instead. It's 70% APY. So medium exercise risk. We'll click next, and we'll stake an amount of Solana. We'll use 1 right now. You'll see basically this is saying you have a price target of $25 to sell the Solana. So above $25, you're going to end up with USDC, and below you'll end up with some premium amount and your initial Solana back to you. So we're withdrawing at February 17th. It's about 10 days from now. We're going to evaluate the two outcomes. So this is where and why the product is called the dual investment pool. There's two different outcomes at expiration. The first being you get exercised and you only end up with USDC. So here you'll see there's $25 of USDC. That corresponds to the strike. So if the price is above $25, you're going to receive $25, and you're going to receive 35 cents that you get paid immediately upon staking. This is the first outcome. This is known as in the money, or ITM here for short. We can see a little more details on that in this box here. So this breaks it all down. You're staking right now. The premium is being paid immediately. That's a key feature. This is different than if anybody's familiar with decentralized option vaults. The withdrawal date is going to be fixed at Friday at noon UTC. You're going to earn 35 cents of premium, which means if this gets exercised, you're going to earn the $25 and the 35 cents that you get in the premium. So we're going to say, okay, we understand this outcome, we agree. And the next one is when it's below. This is maybe a more favorable outcome because you're going to receive your entire deposit back. So you're going to receive 1 Solana back, and you're going to receive 35 cents of premium. We look at the details here, pretty much the same thing. The real key difference here is that it's going to say you get 1 Solana and 35 cents. So, okay, great. We know there's two outcomes now. One in the money, and this is known as out of the money. We kind of prefer the out of the money case, maybe, but the reality here is that if we're staking into this, we would be okay with selling at $25, to sell our Solana at $25. So we'll click next, and then there's 4 acknowledgements. Real quick, not a principal protected product. This means you might lose the Solana, right? You might actually end up with $25 instead of the 1 Solana. That's what that means. The next is that you can't withdraw the funds until expiration date, right? You have to lock up until February 17th. Afterwards, at any point thereafter, you can withdraw the Solana, or you're going to end up with USDC, so you might be withdrawing USDC. And reviewing the possible outcomes, that's what we just mentioned, and that you're actually able to use these products. So here we'll stake, and we'll see the transaction window pop up. So we're depositing 1 Solana, okay, and a little bit of gas. We're going to receive back 35 cents, that's the premium, and we're going to receive this 1 dual dip token. This represents the actual option and our claim on the collateral at the end of the day. So I'll approve this. We'll see the transaction confirmation pop up once it's confirmed. We can click on this transaction. It's going to open up Solana FM. Okay, yeah, you can see it's here. And now we'll see as well our balance. I have a few other balances in here, but this is the pool we just staked into, right? So this one, we deposited 1. It's going to be February 17th, and the strike is $25. So you can also see the info tip here. You're going to be able to withdraw these funds after the expiration date at 12 UTC. So that's the beginner mode. Now we're going to cover the advanced mode of the app. So there's several different pools. There's actually 2 different pages. It's completely listed here. We can sort by expiration. So there's 2 different expirations typically listed. There's going to be a 1-week expiration and a 2-week expiration. We'll open up more as need be. The expiration time not listed, but it's in the details, is 12 UTC. There's a variety of strikes here. Right now we only have upside pools listed, meaning these are call options. The APY here as well is filterable, so if we wanted to see what the largest APY is, that's going to be the 2-week option. It's the nearest at the money, right? So it's trading 22.97 and the strike price is 23. That represents a 353% APY. There's a lot of compounding involved there, so that's why it can appear very high. Per Solana that we deposit, we're going to receive $1 out. We'll stake into this one. Why not? We're approached by the details here, so we can see the expiration date, strike, the type is upside, or for those familiar with options, it's a call. The APY, the source is streaming. This is important. If you see that the source is backstop, that means that the protocol is the one providing the end liquidity. When it says streaming, it means an external market maker is actually providing this price. But you'll basically get a better rate, generally speaking, from using an external partner. We recently increased the maximum that you can actually deposit, so you can deposit up until getting out $100 of premium. For now, I'm just going to use 0.01. And so that'll be just 10 cents of premium that we're going to get out. There's 2 outcomes, right? So there's an in-the-money outcome here and an out-of-the-money outcome. Generally, we're going to prefer the out-of-the-money outcome, as mentioned. And the reason for that is we're going to end up with our Solana back. But this product is really designed at targeting people who are interested in selling anyway at a certain price, but want to additionally earn some yield for doing so, right? So yeah, I'm okay with selling at $23, and because I'm okay with that, I can actually earn this premium, right, this 10 cents. So that's kind of the setup. There's a pretty long disclaimer here. We highly recommend you read it. The key pieces are that you're not going to potentially end up with all of your Solana that you deposit back, right? It might be exercised away and you'll end up with USDC. The strike price is where that would happen, and that your funds are going to be locked up until the maturity date. There's also a note here on the APYs, just how that they're intended for just comparing between the different pools, right? You can see that higher APY pools represent a higher risk, right? So go back here, say we acknowledge these, and we'll stake. And we'll be confronted by the pre-flight transaction. You'll see that we're going to be depositing 0.1 Solana. We're going to get out roughly 10 cents. There's looks like the price has ticked down a little bit, so we're going to get a little less premium than we were before. And we're going to receive 0.1 dual dip tokens. These represent our collateral, so our ability to withdraw either this 0.1 Solana or this USDC. So I'll approve this transaction. We can click here to view the details of it, and yeah, you can see all the visuals there. Great. We have added this feature to add to your calendar. I highly recommend this as well because you don't want to forget that you have funds here. So if you add that, it's basically going to prompt you to connect it to your Gmail or any other calendar apps you use. So I'm not going to save this, but you just click save and you're done. You'll get a reminder about it. And that's all for here. And then we can view the actual balance of our tokens back over here on the balance page. So we have several different ones now that we've done from the testing. This Solana here, this 0.1 is what we just did. So like I said, it's expiring February 17th, at the strike of $23. And once we pass expiration, this withdrawal box will light up and actually be withdrawable. In summary, dual investment pools are a good fit for users who have a price target in mind they'd like to sell, and in the meantime earn some yield. This is a sustainable way to earn yield, and at the end of the day, what this is actually a structured product. You are selling call options, so please take the necessary precautions and understand the risks that you are engaging with when depositing here. Remember, these APYs are just for comparative purposes. Really recommend you look at the premium values to understand better the amount of money that you'll be getting out in return. So we just increased the limits, so happy hunting.